everyone for joining us today. My name is Cédric Joutet. I'm Development Finance Advisor at Globesight, and I'm very glad to be moderating this session on scaling innovative financing solutions for forcibly displaced people, refugees, and their host communities. This roundtable is jointly organized by Globesight and Developing World Markets alongside key speakers from the International Finance Corporation, the United Nations High Commissioner for Refugees, and the US International Development Finance Corporation. Before we start, I would like to give the floor to Tawfiq Rahim for the opening statement. Tawfiq, who is the founder and the president of Globesight. The floor is yours, Tawfiq. Thanks.
Thanks, Cedric, and it's great to be here. I'm just joining at the outset, but I really wanted to make sure I welcomed everybody joining in from around the world, from so many organizations. We're really, delighted that Developing World Markets, has decided to co-host this event today with us. It really comes out of a couple of years of conversations we've been having at the leadership level of both of our organizations and at the working level. And we've often been talking about how we can advance a different way of thinking about kind of these issues that we're going to discuss today. Aleem and Suma, who are going to be speaking from DWM's side, I think we'll go into a lot of details. But what we're trying to drive forward both today and after is a much more dynamic conversation that's practically oriented on solutions. I think since the World Humanitarian Summit, we've been talking about all types of financing and different types of bonds, but really where we are in the moment today is action, and we need solutions. And I think that's what's exciting with the panelists that Cedric mentioned, and also with the different organizations present, we can have that conversation. So I encourage everybody today to hold all the speakers to account in that direction. We want to understand, where can we get outcomes? Where can we have follow-up? Where can we actually push funding and financing towards some of the solutions being discussed? And I also want to thank, our longstanding partners, UNHCR, who, we've been doing a little bit around climate change and displaced populations. And I think today it's so important that UNHCR, who is responsible for many of these communities, is here today. And I, hope to also see in the follow-up UNHCR taking this group of stakeholders, not just the one speaking, but actually many of the attendees. And so we'll have a little bit of follow-up to make sure everybody can stay part of this conversation. And really glad to see this group and to see what discussion unfolds. And thank you again to DWM for really stepping up and driving this conversation today and in the ecosystem. So back to you, Cedric, and I look forward to both some interesting and hopefully exciting moments during today's roundtable. Thank you.
Thank you very much, Tawfiq, for this contribution. And now I will give the floor to Suma, who is Vice President of the Private Equity Group of Developing World Markets. Suma will tell us a bit more about DWM, and she will also share some thoughts about innovative finance solutions in the context of forcibly displaced communities and refugees. Suma, the floor is yours.
Thank you, Cedric, and thank you, Tawfiq. Hello, everyone. We are very pleased to be here today and co-hosting this event alongside Globesight. I'll just provide a little bit of overview about Developing World Markets, or DWM, and an introduction to the topic that we'll be discussing at the roundtable today. So about us, DWM is an impact investor exclusively focused on emerging and frontier markets. We have been investing for over 25 years now, and we have been looking at very highly impactful thematic areas with a primary focus on financial inclusion. We have also invested in clean energy in the off-grid solar space, and are increasingly starting to look at opportunities to pursue investment opportunities within the displacement context. We have in total 16 global offices at this point. Over our track record, we have made investments that seek risk-adjusted returns alongside measurable impact. 100% of our investments are aligned with impact, and we're signatories to the operating principles for impact management. And most of our 100% of our investments are in emerging and frontier markets across both private debt as well as private equity. We have deployed a little over 2 billion in capital to date, and this translates into investments into 200 investees. So that brings us to the topic today that we are here to discuss. And everyone at this roundtable, especially everybody at this roundtable, I would say, is aware of the key stats surrounding displacement. There is an increase in the volume. At the end of 2020, there's been a significant increase to over 82 million forcibly displaced people. Alongside that, we have the twin effects of an increase in length or the duration of displacement. Over 3 quarters have been forcibly displaced for a protracted period of over 5 years. And then we have a rather low level, almost negligible level of returnees, which has been declining over the last 3 years. Added to that is that 85% of the forcibly displaced people are in already resource-constrained developing countries. And I think what that results in is any solutions that we're thinking through or any ecosystem we are developing has to integrate a response that takes into account forcibly displaced people alongside their vulnerable host communities. And that's what we'll be speaking about today. I think one of the main factors is what are the tools or solutions that are available to respond to complement humanitarian action. And that's when we'll be focusing on the nexus of humanitarian to development finance to private sector, which is what you see on the screen right now. It's a visualization. I'll be upfront, it's not an exact science. This is something we've taken from the public domain that ODI and IKEA Foundation put together a couple of years ago. We've added to it. But what we've tried to do is visualize the various initiatives that are out there serving displaced communities, plot that on the stage of crisis against the targeted financial returns. And so what we'll see is that at the stage of the acute crisis, it's primarily aid or humanitarian aid, which is in the form of grant capital. Towards the left, which is the pre-crisis, I think what we are focusing on is much more sovereign level interventions by multilateral organizations. Today's roundtable will focus a lot more on the right side, my right side, which is the protracted crises as we move from acute all the way up until later stages in the crisis. And we see that there's much more flexibility in the range of tools that we can deploy, because the primary idea here is to go from building where we are now, which is building the foundations for an ecosystem, because it's at a very nascent stage to market. But trying to understand how we can scale these solutions into more long-term and sustainable outcomes. And so what we see here right now is a range of solutions across development impact bonds. We have guarantees, we have debt funds, we have equity funds. We'll be speaking to this a bit more, but this touches on the system level interventions that are possible across this nexus. On the next slide, we switch the lens one level down to focus on end beneficiaries. So how do these system level interventions that are focused on scaling innovative finance or scaling the ecosystem that will provide solutions, how does it translate into end beneficiaries? And we've plotted it across a very similar timeline, moving from the immediate aftermath, which is humanitarian aid or cash assistance, going up to, at the protracted crises, gradually increasing into recoverable grants, seed capital, all the way up to savings, loans. The intention here, of course, is in the long term to enhance self-reliance and financial resilience for forcibly displaced people alongside their host communities. So that's the context and the bounds within which today's discussion will focus on. We're very pleased, of course, to be co-hosting this with Globesight and our key partners and speakers, the IFC, UNHCR, and DFC. So without further ado, Cedric, let me hand it back to you for the introductions and the roundtable.
Thanks, Suma. Thank you very much for this introduction and this context. Maybe before we start discussing this topic, I would like to start by introducing and welcoming each of the speakers. I will start with Alim Remtullah, who is partner and co-head of the private equity group for the developing world markets. He was based in Impact Investment Manager, active across 50 emerging and frontier markets. Halim has invested into financial inclusion and clean energy investments, and he currently serves as a board member and shareholder representative for financial institutions, serving low-income entrepreneurs and MSMEs. Halim brings nearly 2 decades of experience with socially responsible double and triple bottom line venture capital and private equity funds. Alim, welcome again. It's a pleasure to have you with us today. Our next speaker, thanks Alim. Our next speaker is Krushkaya Sierra Escalante, who is Senior Manager of the Blended Finance Department at the International Finance Corporation, the IFC, managing a pool fund of over $5 billion focused on accelerating IFC's engagement in low-income, fragile, and conflict-affected countries. Since 2013, Krushkaya has managed the IFC's blended finance facilities for climate with more than $1 billion contributions, and she also manages the IDA's private sector window. Prior to her current position, she headed the blended finance units, and she served as IFC's global lead counsel for climate and blended finance. Welcome again, Krushkaya, and it's a pleasure to have you, as part of this roundtable.
Thank you, Sergio.
Thank you, Krushkaya. Our next speaker, I would like to welcome Betsy Lipman, Chief of Section for Development Partnerships, Analytics, and Research at the United Nations High Commissioner for Refugees, UNHCR. Betsy has worked on behalf of refugees and other forcibly displaced persons for 30 years with UNHCR, UNDP, the US Department of State, the World Bank, the International Committee of the Red Cross, and the American Red Cross. So she's currently Chief of Section in UNHCR's Division of Resilience and Solutions, and her current focus is in operationalizing the Global Compact on Refugees through building development partnerships and building and using the evidence base for inclusion. Betsy, it's a pleasure to have you today. Thanks for joining us.
Thanks, Cedric.
Thank you, Betsy. And last but not least, Bruce Cameron, who is Director Finance at the US International Development Finance Corporation, the DFC. Bruce has worked at DFC for over 25 years on a wide variety of projects and sectors. Bruce previously worked for the Washington Operations Office of McDermott International, a multinational energy services company, on issues ranging from power project development to defense and energy government contracts. He also worked as an architectural staff member at the Northern Virginia architectural firm of Temple Washington and Associates. Bruce, it's a pleasure to have you as part of the speakers today, and welcome again.
Thank you.
So for this roundtable, we'll be exploring the scalability of innovative financing solutions for forcibly displaced people, for refugees and their host communities. We will be exploring three main topics. We will start by setting the context of innovative finance for refugees. Then we will focus on specific intermediation tools, and we will end with specific stories of impact on end beneficiaries. So we would encourage, if there is someone, some of the attendees who want to share their stories or initiatives with their own organizations, please feel free to share it in the Q&A section, and we will give you the floor at the end of the roundtable. And we also encourage, of course, participants to ask questions during the roundtable. Please write your name, organization, and question in the Zoom chat, and we will convey your questions to the speakers. And finally, please remember that the event is live streamed and recorded, and we would encourage also the speakers to keep their camera on when answering the questions. So let's start by setting the context together. Maybe as a starting point, we know that innovative financing solutions bring together the private, public, and development finance actors, and each of them having very different approaches, languages, and even principle to collaborate together. So on one side, such collaboration can open up opportunities for fresh, new solutions. However, on the other hand, it also raises questions about the alignment of incentives, the different types of priorities between each of the players, and even different definitions between stakeholders on performance, on what it means to generate returns. So, and we are lucky to have today speakers from different organizations, as a humanitarian, development finance, and private sector. So in terms, for the first question, I would like to ask Betsy Lipman from UNHCR. As a humanitarian agency, being first defense in response in urgent situations for forced displacement, we would like to hear from you why you think there is a need to look at innovative finance beyond traditional aid. And maybe in addition to the why, you may want to start also by your own interpretation of innovative finance. So Betsy, the floor is yours.
Great, thanks, Cedric. And thanks to Globesight for organizing this, and to the other panelists. It's an honor to be on this panel and to speak on behalf of UNHCR. When we were preparing this, I said to Cedric, what is your definition of innovative finance? Because I think for UNHCR, I think some of the things that we consider innovative for many of you will be typically what you do. But this is a very new, I would say it's a very new way of thinking in UNHCR. And it's only been a couple years that we've been engaged in what we would call innovative finance. So, is a small fund to support microfinance, is that innovative financing? So I think it would be useful if colleagues can also maybe put in the chat what they think is innovative finance, because I think for us, it just may be new for us. It may not be innovative in the way you look at it. But I think it's important to maybe put some numbers on the table for the why. So if you look at ODA, 2010 ODA was about 120 billion, and 2020 is about 158 billion. But if you look at the number of displaced in the same 10 years, we went from 40 million people of concern to UNHCR to 80 million. And so that's doubled, but ODA has not doubled. And if you look at what's available in private finance in 2020, it's $373 trillion. So it's a pretty simple question, I would say, for UNHCR when you say why. Why should UNHCR be interested to get involved in innovative finance? And I think it's clearly about the financing gap that we see. UNHCR's budget in 2020 was 8.7 billion, and what we received was 5.3 billion. So just in the humanitarian need alone, there was a gap of over $3 billion. We're never going to meet this gap with just ODA. The only way we can meet these gaps is going to be by engaging private finance as well. Just perhaps another few points. Suma mentioned this, but in terms of protracted displacement, more than 70% of our populations we find in protracted displacement, which we define as over 5 years. But to be very frank, when you get past the emergency, the humanitarian emergency, you end up in what we would call more of a protracted situation, because you're looking at what could potentially be more development-oriented interventions. And this is where we also need to look at other financing. So for us, trucking water may be an emergency approach, but building a water system is a much more development-oriented approach, and that's what we need to do. In 2018, the General Assembly adopted a global compact on refugees, and that's really what guides us now in terms of how we engage in our space. And the whole idea of the global compact was that UNHCRs are not responsible alone for providing protection and solutions for populations of concern. It's a whole of society approach. And so before, we were quite internal and we tried to do everything on our own. We want to bring others into our space. It's not that the funding needs to come through us. We're not a development actor. We're not private sector, but we need to bring financing and other solutions to the situations in which our populations live to support refugees and others in their host communities and governments that are hosting. And one of the things the High Commissioner said was that this compact, while not legally binding, it represents the ambition of the international community to transform the response to refugee situations. And in order to transform, we need new partnerships. Thanks, Cedric.
Thank you, Betsy, very much for these first elements of answer. And I do agree. I think we could even spend an overall roundtable just on defining innovative financing solutions for refugees. It's true that, and I see some comments coming up in the chat trying to define innovative finance. Maybe I will give the floor to Krushkaya, picking up on from what Betsy just said. If you could please share your own your interpretation, of innovative finance from the viewpoint of the IFC in the context of a global displacement, and maybe we'll have time after to get in detail in the tools, but maybe say a few words around blended finance in this case. Thanks.
Thank you very much, Cedric, and I agree with you that probably we'll have as many definitions as panelists and as participants. So, definitely it's something that, all of us probably will have similar common elements, but at the end of the day, with our different, slight different nuance. So for IFC, as you mentioned, we have a strong track record of creating innovative solutions to catalyze limited public funds. So as probably many of you know, IFC is the private sector arm of the World Bank Group. So we are entirely focused on the private sector. So for us, the utilization of small amounts of public funds, which traditionally have come from, government partners, but also have included funding from, some foundations, allows us to de-risk and unlock private investment using what we call these blended finance solutions. When we talk about blended finance, we are talking about a co-investment, and this is basically what the model that IFC uses, utilizing IFC's own account investment together with a concessional piece. And when we talk about a concessional piece, we are utilizing many forms of, de-risking. It could be that we look at longer tenors, we could look at subordinated, structures, most of them being on concessional basis, which means that we are not charging for the risk that these public funds are taking. The idea is that we are trying to help, create markets. We are bringing, what we hope to be temporary solutions, so that at some point in time we bring the commercial, money coming in. And I think it's the introduction that Suma had with the graphs showing the different solutions across the spectrum of concessional versus commercial. It's, what it's, interesting to see. One point that we like to, I will say, highlight when we talk about blended concessional finance is that if you want at some point in time to be sure that you have or you move towards commercial solutions, you need to do it with discipline. And for us, that means that every time that we are using this concessional financing, we look at a set of principles that are helping us ensure that we are not crowding out private sector. The worst thing that you can do in any area, including, the topic that we are discussing today with forcibly displaced populations and their host communities, is that if there is interest by the private sector, that you use public funds to, crowd them out. So the idea here is that we need to be thinking about minimum concessionality, solutions that could become commercial at some point in time. And for us, these aspects of it is what I will call, innovative, finance. When do we use these innovative finance solutions? When we see a high degree of commercial risks. And we are going to see it in this context. And I think, as Betsy mentioned, many times when it becomes protracted, they become development issues. So, high degrees of commercial risk, a need for long-term finance. You may see that, if this becomes, a development challenge, and a small amount of, humanitarian support to begin with may not be the right solution if this is taking much longer to, to resolve. And then there is also a set of issues that we need to be aware, which is the idea of the perception of risk. even if we may be able to move towards commercial solutions, if you see, equity market is opening up, seed financing coming in, there may be still a very strong perception of risk that we need, to help manage. And, structures such as, guarantees, first loss guarantees and other aspects may help us, move towards, that. So, in summary, just to move this, we bring to the table as IFC about 20 years of experience in blended finance. Our expectation and, what we believe in particular, talking to so many of our internal teams that are working in the ground, is that many of these solutions will be relevant when we are looking at private sector solutions for, forcibly displaced populations and their host communities. So from that perspective, I think that, that's where the innovative finance that we expect to bring, and that we are seeing so many others, as per Suma's earlier background coming in, makes a lot of sense. Thank you, Cedric.
Great, thank you very much, Kulkaya, for all these elements, and it's also something we discussed together previously related. When you mention innovative finance for refugees and displaced communities, like private sector is always a component. In fact, the innovation within this specific thematic. And when you mention private sector, after you automatically have to shift to risk analysis, and the private sector doesn't have you always need to mitigate the risk for the private sector, and that's where the IFC also, with all the tools that are provided by the IFC, can help creating markets and attracting private sector participation. Maybe I will give the floor now to Bruce Cameron from DFC. If you could also speak to DFC's role in innovative finance and share any reflections on how one matches the context to the type of capital necessary in global displacement. Bruce, the floor is yours. Thanks.
Thank you. And many of my few comments will echo the IF speaker who she hit really many of the key points. With DFC, with OPIC and the guarantee team from AID now becoming DFC over the past year and a half, and a broader set of tools to work with. We now have equity authority, our lending authority. We also have guarantee authority. But I think the two deals, I did one of the refugee deals and a colleague, Dia Martin, did the other one. I think and of course, DFC is learning and growing, right? We're still interpreting our new statute and figuring out how to implement all of our new authorities. But as IFC indicated, that for us, at least on the lending side, it comes down to a simple point. Can we lend funds into these innovative structures, blended capital structures? Is there a way to get repaid? And part of that is, you have to look at the duration. Are we willing to do a long-term deal where we defer off principal repayment? But the fundamental point, generally speaking, in our range of lending is, can we get our principal back? And then on these innovative facilities, where can we price aggressively to help make them happen? And just as was said, we don't want to crowd out the private sector. What we want to do is help in these frontier arenas, show that one can actually create portfolios of lending that can be predictable, that can predict the amount of risk. And okay, maybe we do a facility where it's a little aggressive on the pricing, but the first goal is to show that it can repay with some predictability, and maybe it's a low return. But ultimately, what we're trying to do is then the next phase of that evolution would be for the commercial market to hopefully be able to come in with more commercially oriented pricing, and of course to uplift people. And it sounds so fundamental, but what's been great, I think, over the past 5 or 8 years to see more of these organizations take what we would call grant capital or first loss capital or low return capital or normal development type of capital and start to put it together, leverage each other's resources where we can, because I think also for development lenders, it's been hard because years ago when we were OPIC, we didn't really leverage grant funds, and that created a problem. We weren't really able to do a lot of the innovative projects without finding ways to partner together with other types of resources. And I do think, thinking of the CGAP example, what CGAP was able to do over years for the microfinance sector, it was able to develop common language and common definitions. And I think, I mean, this is a broader point than just refugees and displaced people, but this definitely applies for this frontier sector, that I think we need to get to a place where when we say development equity and development debt, we start to be a little more specific in what we mean in our common language and our common definitions, because I think we say equity when sometimes we mean development equity, which is a little different than straight up commercial equity. And the same thing with development debt. It's a little different than straight up commercial debt, and they kind of get mixed in. And particularly once we get into these blended finance in it, you know, bringing different types of capital together. But within the context of displaced people and refugees, I think this is a perfect place for these type of organizations to come together, because the commercial marketplace isn't going to do it by itself. It's a perfect place for us to step in and partner and bring different forms of capital together to start, you know, as the chart shows, take these baby steps to show some parts of this marketplace can be supported in a financially sustainable way. So again, I don't want to duplicate, because I think the IFC speaker really hit a lot of the points very well. So that's my comments.
Great, thank you very much, Bruce. It's very enlightening, and I will give the floor now to Alim, who has a difficult task to speak right after all the inputs from the IFC, DFC, and UNHCR. Alim, you represent here maybe the private sector, so we would love to hear from you, building upon the inputs that we have received from the previous speakers. What are the characteristics that would make it an appropriate context to bring in return-oriented private sector capital? So how do you align? And here we come into the notions of incentives between the private sector in contexts which are not generally seen for private sector participation. So Alim, the floor is yours.
Yeah, thanks, Cedric, and really appreciate kind of the comments that have been made already by Bruce and Kristaya and Betsy. I think that what we've learned, at least over the last several years, kind of while discussing with LPs, oftentimes hearing about forcibly displaced communities and hearing about refugees often evokes images of people in camps, and while the humanitarian need in those settings is significant and severely underfunded, I think the reality, as was articulated earlier by Betsy, is that we are in protracted situations, and frankly, only 3% of the displaced population globally actually lives in those camp settings. And even when you think about the context of the camp settings, these are not simply rows of tents. They're actually their own socioeconomic spaces in their own right, with vibrant markets and economies, right? I mean, if you think about Kakuma and Dadaab in Kenya, you think about the Palestinian camps in Lebanon. I mean, they have their own systems of production, consumption, exchange, entrepreneurship. And I think when we think about what the appropriate context is in which return-oriented private capital can actually come to play, I think we have to answer a couple questions, right? One is, is there a current or anticipated, unmet need? I mean, some of us call it market sizing, some of us call it total addressable market, call it what you want, but is there demand for it? I think the second is there a track record and a way to appropriately assess and price and underwrite the risk? And as Kristaya said, I mean, this is often about not the actual underlying risk, it's about the perception of risk. And I think the last piece is, and particularly relevant for us as impact investors, is, can that need be met without actually exacerbating the situation of vulnerable communities? And I think, or at least the response that I would posit for, the people on this panel is that I think all the answers to all three are yes, that there is an unmet need, right? Not only because of the development nature of the situations that we're encountering, but I think to date, war, conflict, unemployment have been the most influential drivers of migration. I think the next two decades will probably be more consequential with respect to climate change, driving water scarcity and crop failure and sea level rise, and the ensuing displacement that will emerge from this. So this problem is not going away, and it's likely to be kind of exacerbated over kind of a fairly limited time frame. And so we need to start looking for solutions. With respect to the second question around track record, I think we absolutely need to be reflecting that there is already a track record of having done this, right? I mean, the CETA UNHCR credit guarantee facility example that was on Suma's chart, the Nazir Fund, Kiva's historic lending to the space, and it's the kind of the new fund that DFC has supported. I mean, all of these offer insights around the risks associated with lending to displaced communities and their host and source communities. And I think we'll touch on some of these in a bit, but it's this is not about compromising on an institution's risk management standards or creating a loss-leading product that doesn't make business sense. I think the vast majority of this is really a market opportunity that we as private sector are seeing as against a track record that is now being built, right? I mean, even if you put credit aside, I think something on the order of 45% of adults with savings, 45% of displaced communities actually have savings, but only 7% have access to formal financial institutions, right? So there is a market opportunity there to actually, solicit deposits, get people formal financial access. And I think with respect to the third question, right, can this need be met in an appropriate way? I think we'll get into that, but certainly I think there are opportunities for the right guardrails to be put in place. But that's maybe how I would suggest kind of the response to this kind of appropriate context is that the appropriate context actually exists. We just need to find opportunities to deploy capital in the right way and in the right structures to be able to leverage those opportunities.
Great, thank you, Alim, for this very instructive answer. And I do agree. I think today when we talk about private sector participation, the private sector will always look for data points that show that specific interventions can deliver returns as well as impact. And today, as Suma has shown, at the beginning, we have like the data points to show that private sector participation in the context of displaced communities can actually work and can be a success. Maybe I'm conscious of the time as well. We will move to the second section of this roundtable, and to give some time, for the Q&A also a bit later. So the second section is more around intermediation tools. So we'll try not to be too technical for this section. I know it's a temptation to be quite technical, but we will be cautious also of the audience that we have from different backgrounds. And here what we want to do, in fact, it's starting from the context that we have explained to move for each of your organizations to explain what are the kinds of tools within innovative financing solutions that are interesting for you and for which reasons. And we'll try to to cross and to see what the different answers we have from you. So maybe we'll start with Bruce from DFC. We know that the DFC has supported the launch of a refugee debt fund by Kiva, also the first development impact bond for supporting refugee livelihoods. So maybe the question for you, maybe more on the debt side, would be what are the aspects of such structures that are replicable and scalable from the DFC's viewpoint?
Yeah, and I know this is going to sound like a really general response, but and both structures are very different, but both have something in common. And as I alluded to, DFC is still evolving and morphing as we become this new entity and learn how to use our new authorities. But the great part is, within statutory boundaries, as long as we can look at these type of facilities and see a way to get repaid and that those repayment streams can come from multiple different sources, right? That then we can say, okay, well, show us where you think we would fit into your capital structure. And in the Kiva Refugee Investment Fund, so Kiva created Kiva Capital Management, which is now doing different funds, and CRIF was one of their first funds. And as was alluded to, Kiva itself already had a track record of working with refugee and displaced persons communities to figure out whether people would repay or not. So they had that track record that informed their decisions to create the refugee fund. And then the fund has an element that I like to see, right? They've put together a team that knows this sector, and then it's a portfolio approach, right? So, and it has a time horizon over 5 years. And to me, these are really important, because if you're able to have a portfolio, obviously if one sub loan or one sub investment hits a bump, you have the portfolio. Plus it has the time horizon. And personally, I would argue some of these things in these frontier arenas should be longer horizon to give time to recover. The other thing is active management is presumably, whether it's a fund or some type of other financial intermediation, the team is going to adjust, right? It's going to keep adjusting if they see issues as they continue to do lending. So it's not a static approach. And the facility that Dia Martin did, it's a different structure, not exactly the same way, but it is a portfolio vehicle. It has multiple partners. It has that same theme where the team that would be in charge of making the capital placements has expertise in the arena. So I think there are these common themes, but again, at least for DFC, the great thing is we're not locked into a prescriptive formulaic, it can only be one way. The main thing is, does it cause human uplift? Let's start with can we get the principal back, and where could we price? And we can be innovative on how we price in the beginning and the end to try to match the project. And then, as has been alluded to by myself and others, is can this lead to something that then creates more sustainability in the marketplace and in the next evolution of what comes next? And Aleem touched on an important point. Bear with me 1 second, just almost done. The perceived risk versus real risk. And I think that's a great area for our organizations to be able to come in, because like in this arena where there's so much perceived risk, if we can't get past that to be able to quantify the actual risk, it's really hard for commercial capital to come and play with us. But those are my brief comments so that other panelists have time.
Great, thank you, Bruce, for your comments. And I will move on to Kruskaya from the AFC. We would like to hear from you maybe on blended finance. So everyone knows, I'm sure that the AFC has recently launched the blended finance facility for refugees under the Prospects initiative in partnership with the government of Netherlands, which emphasizes de-risking high impact projects benefiting host communities and forcibly displaced people. So the question maybe related to the blended finance is how blended finance as a tool is helping the objective of commercial viability and high impact delivery for projects. And maybe not getting too technical, but within blended finance, what are the different tools from IFC's viewpoint which are essential for achieving these objectives?
Thank you, Cedric. I'll try not to get too technical, because I think as practitioners sometimes you're right, we have the tendency of getting a little bit too much into the details, when at the end of the day what we need, as Bruce mentioned, is the flexibility to see what the challenge is and then respond it accordingly. So as you mentioned, we were able to launch, with the support of the Netherlands, this new facility as part of the Prospect partnerships. Just for you to know, this was just in June of this year as part of the part of our contributions to look at this space. So we haven't been able to do any transactions under this facility. It's 17.5 million facility that is seeking to de-risk, as you mentioned, and increase financial viability of high impact projects benefiting refugees and forcibly displaced populations and their host communities. The idea with this facility that is focusing on 8 countries in Africa and Middle East is to create a bit of a demonstration effect. And I think for us, to utilize concessional finance that is moving towards commercial sustainability, we aim to do 3 things. How do you unlock more private sector? So the idea is, we may be able to bring these small amounts of public funds, but how do we bring more DFI funding on commercial basis? How do we bring, sponsor money that might be relatively small, but it is looking for a return? And I think, you were, highlighting that importance. Can we think about return? Maybe we need to be more patient, but this is not a pure grant that is not seeking to be repaid. The second, important thing that we look at it is, what are some of these emerging approaches in the private sector? It's not only how IFC perceives that, we are going to be helpful, but if we look at what is the challenge or what are the potential partners, what is that they need? And then, as I mentioned, at the beginning, is the idea of this demonstration effect. You may have enough funds to do a few projects that are not expected to receive full commercial returns, but at some point in time, you want to be able to demonstrate so that others are coming in that require less concessionality, and at some point in time, hopefully, no concessionality at all. The overall objective of this facility is to really create a set of investable projects where we can, look for these tools. And you ask, what are some of the tools in a very simplified way? We usually look at 4, I would say, big buckets, and then there could be a lot of financial structure in there, but is it that financing is needed? Is it debt that is needed? So, that's one of the buckets. And I think, Bruce and some of the examples on the debt fund and, the capital markets transactions are more on that arena. And then you look at, is it risk capital that is needed? And that's your second bucket, which will be the equity. And I think Alain probably has the wealth of experience on, basically this type of, equity interventions. And then, you have what I call, the set of more de-risking guarantee types of it, where you are tackling the issue of the perception of risk, that you may not need actual money to go in, but that idea, for example, working with financial institutions or financial intermediaries, where you tell them, look, go take the risk, and I will be here to to cushion you, to de-risk a portion of the risk that you are taking. So that helps, manage some of this enhanced perception of risk that we, several of us have discussed. And then the last bucket, and something that we have used in a very interesting way, for example, in the gender finance space, and, also in the climate space, is this idea of performance-based incentives. When, partners are already doing something for the communities that we are thinking about, but we tell them, you are perhaps lending, to forcibly displaced people and their communities, but it's only a very small percentage of your assets. Can you move to do more of that? And if you demonstrate that you have done that, I'll give you an incentive. So, these things are tackling different things. One is tackling behavioral changes, for example, the performance-based incentive. The other one is tackling participation constraints. And for us, this is how we look at the blended finance. And as I mentioned, in each transaction that we'll do, regardless of, the instrument, and, as I mentioned, this new partnership really gives us that flexibility of instruments. We are going to be applying the blended finance principles, because what we want is minimum concessionality, commercial sustainability. How do we support other markets? Why are we using blended finance? So to do it in a very disciplined way, so that, we can actually bring commercial solutions in the future. So I'll stop there to continue the conversation with others.
Thank you so much, Krushkaya. And it's very interesting what you have just said around results, and also moving to more result-based financing. In fact, so it's maybe it would be interesting to touch upon this a bit later in discussion, when we'll focus on impact for beneficiaries, and we can discuss around result-based financing and how we deliver results. And thanks again for not being too technical. I know it's a bit frustrating maybe for the speakers, but we will do maybe a roundtable, like very technical soon, so that we can discuss it together. So maybe now I would like to give the floor to Alim. Still, from the private sector viewpoint, maybe picking up from what Krishkaya has just said related to blended finance, what role can private sector play in building a sustainable market addressing a global displacement, and maybe touching upon as a blended finance and so some other tools that you're using at developing world markets.
Yeah, no, thank you, Cedric. And, I think, Betsy really answered the question in her opening comments, right? Private sector can actually bring the scale that is required to actually potentially be able to address, some of the funding gap here that exists. I think I really like Kriskaya's kind of thoughtful, framework in terms of how she was, mapping out the different, pieces of the ecosystem, and really it is about kind of building out a toolkit of complementary solutions, right? I think as Bruce mentioned, we're really far away from being prescriptive about the solutions. I don't think we have to worry yet about any competitive threats or stepping on toes or anything like that. I think we just need to work together to actually build out that spectrum of solutions and the body of evidence that will help us scale. And I think Bruce mentioned it, but bring additional commercial capital into the space to actually provide this transition from, what we call funding to financing, right? To provide relevant, affordable, timely, and context-specific capital. I think in terms of DWM's, own role, I think we've seen this play out across multiple sectors, right? We've seen it play out from the earliest days of microfinance when we did our first CLO in microfinance, 20 years ago. We're seeing it play out in smallholder ag finance, which maybe Bruce can probably speak to better than I can. We're seeing it play out in distributed kind of off-grid solar and energy solutions. I mean, all of this will help, kind of these set of solutions will help drive this cycle of additional capital, new entrepreneurship, sustainability of business models, and then further supply of additional capital, right? And I think that's this kind of self-reinforcing system that we really need to get to. And for DWM, at least, having been in impact investing for as long as we have, with a portfolio of 200 financial institutions, we were trying to figure out, well, what is it, that our FIs actually need to be able to start, tackling this problem. And we undertook a survey of our financial institutions, and actually what came back was maybe not particularly, kind of intuitive. It really wasn't about the capital and having the right, risk capital and structured kind of, risk tranches and all of that. I think it was largely about alignment, right? It was, 82% of our respondents actually highlighted that it was a lack of support among shareholders that actually was the biggest drawback from them entering into even pilot initiatives in the space. Over half actually said that it was both a lack of knowledge and concerns expressed among investors, board, and or management. And I think a lot of these things are, perception of risk issues, they're education issues, and they're just kind of, bringing kind of the field together. So one gets a sense that it's maybe not just the capital itself, but actually it's rather the implications of what that capital means from a voice and influence standpoint that actually could potentially, drive, the scale up process, right? Ensuring kind of there's appropriate communication, stakeholder alignment at the board and an investor level. I think that'll be critical in scaling. And I think that's really what kind of private sector and best practices kind of in terms of stakeholder management. And I mean that, kind of distinctly as stakeholder management, not shareholder management, but stakeholder management will contribute to this, right? I mean, we found our our financial service providers to really be really sophisticated. Many of them see that underlying opportunity, and frankly, a lot of them, in light of COVID, I mean, COVID's been a force multiplier, and a lot of them have already been rethinking their risk and underwriting models to actually, take stock of the new reality and figure out how to start relending. I mean, this can emerge in a risk-off attitude towards our historical vulnerable populations, and whether it's refugees or other low-income MSMEs. It could emerge in a risk-off attitude, or it could result in a more inclusive environment in which we start shifting this conversation to more kind of affordable and appropriate financing. I'll just maybe add one other point to Chris Kaya's kind of thoughtful framework. I think certainly kind of the debt equity split, the kind of the junior tranching or the risk tranching to catalyze additional capital that comes in more senior to it. A lot of that is important. I think there are other elements, right? That other parts of the ecosystem are offering, right? We have design funding that can go towards kind of launching new concepts. There's technical assistance pools that can actually push investment readiness for institutions that are on the cusp, but maybe don't have kind of the right tracking or monitoring in place. And then there's the signaling effect that actually just the involvement of DFIs can play. I mean, these are, fund structures, CLOs, these large, kind of DIBs. I mean, all these things are complex instruments that require, time, attention, and capital to be able to launch. And for us to be able to spend as much time as we would want to make sure that there are economies of scale associated with the scale that we're able to achieve after actually having undertaken that kind of activity. And if the demand is there, then we should be able to get the supply in tow, especially when there is a sustainable business proposition there. So I'll pause and hand over back to Cedric just to get some additional thoughts here.
Great, thank you, Alim. And it's very interesting to match different viewpoints from private sector, humanitarian agencies, and development finance. And what's very interesting is what you have just said. It's what we realize is that the private sector does not only bring capital, but also methodologies, and the know-how to deliver innovations. What you just said around starting having an evidence-based approach, and also starting with pilot initiatives, proof of concepts. It's really something that is coming from the private sector, and it's a methodology to deliver innovations. In fact, maybe it's something that is crucial for what we are discussing right now. I'm conscious of the time as well, so I will give the floor to Betsy, maybe to close this topic around the tools, and maybe to take a step back. And it's great to have you representing a humanitarian agency here. And maybe, so the question for you would be, what types of innovative financing solutions have been developed by UNHCR, or which ones you see the most potential, because it's quite new. So the floor is yours, Betsy.
Thanks, Cedric. Just one point before, and I think just to draw across what Bruce and others have said, is the value of data. And, of being able to make the case. Bruce mentioned CGAP, and I know on the microfinance side, the randomized controlled trials that were done, and we did a piece of evidence on whether refugees pay back, and we found that refugees pay back at a higher rate than nationals. And this kind of data and evidence really, I think, speaks to the private sector. And it's something that as a humanitarian agency, we never thought about before. So just to put that on the table is, we really have to have the data in order to speak to the private sector. And again, kudos to IFC for doing the Kakuma as a marketplace study that really demonstrates, how much money circulates in that economy. We never knew that as UNHCR. So data is really important. In terms of the types of instruments and mechanisms that we are looking at in terms of innovative financing, they really vary. So we've set up a green financing facility to shift our global operations over from diesel generators in deep field locations. And this is one of our challenges. In order to solve the challenge imposed by our annual budgeting, which is a big problem for us, it prevents us from being able to sign long-term agreements, which is what Bruce was saying, extend beyond 5 years. I mean, we're a 1 year and annually funded organization, so it's quite hard. We worked with 2 development banks to support a guarantee fund to back long-term contracts with private sector renewable energy companies. And we hope that this will significantly cut our carbon emissions by 60 to 90%, depending on the location. And it could free up at least 35% of our current financial resources around this issue, which can then be put back into other needs. As I noted up front, we have an enormous funding gap in our own budget. We're also initiating what we call a project flow to solarize boreholes that supply water to refugees and host communities globally. And we've worked with a development bank to support a revolving fund that will invest the upfront capital needed to shift from diesel to solar power. And other mechanisms that are being developed right now is an impact bond to fund scale up in an innovative livelihoods project in Colombia, an innovative fund to finance reforestation and clean cooking solutions to address the negative environmental and social impacts associated with deforestation, which is a challenge that we often have when large numbers come across a border. And then setting up an endowment mechanism to provide for more sustained, predictable, and flexible funding for UNHCR. And this comes out of having a small team in UNHCR that actually comes more from your world than our world, that can speak your language. And I'll give one funny anecdote. When we first started to work with the World Bank and we did a training with our own colleagues on the bank, and somebody mentioned IDA, and one of the colleagues in UNHCR put up their hand and said, "Who's IDA?" So it shows you the gap in knowledge and understanding between being a humanitarian and where you all come from. So I think really having that lexicon and being able to understand that lexicon is important. Thanks.
Great, thank you so much, Betsy. It's very funny, this, this anecdote around IDA, and it shows that there is a need for, in fact, speaking the same language between all the development finance world, humanitarian world, and the private sector as well. So I'm conscious of the time as well. We still have around 30 minutes, so maybe we'll move to the next topic. And thanks for sharing your views on the tools. We'll move more towards trying to focus on the impact on beneficiaries. Also, I would encourage the attendees of this roundtable, please leave your questions in the chat as well. We'll be happy to answer your questions. I have seen in the chat also one or two definitions on innovative financing, so it shows the diversity of the viewpoints around even defining what's innovative financing. So now moving to the impact on beneficiaries, what we would like is to hear stories from your initiatives, from your organizations. As you know, in this new world, it's quite, I would say, difficult to travel. So for us to travel and to see the impact on the ground, either if you're working in development finance or humanitarian, even in the private sector, it's quite a challenge. So it would be great to hear from you stories on the impact on beneficiaries. Maybe I think what would be interesting is not only to hear a succession of success stories, even I'm sure you have great success stories, but also what could be done better, or maybe what's still missing and what you would like to see today. And maybe one point, as Krushkaya was mentioning in one of the answers, how we can ensure and what mechanisms are in place to ensure the delivery of impact on the ground, and what are the structures and the processes to do so. So maybe I will start by giving the floor to Krushkaya. Either if you want to tell us a bit more around the blended finance facility or any other initiatives that you would like to share with the audience.
Thank you very much. And I just wanted to, I just wanted also to highlight, similarly to Betsy's of, who is IDA. Sometimes, I think even within development practitioners, we need to understand what the language that we are speaking is. I mean, many people, when we think about equity and when we talk about equity, they are thinking about equality. I mean, so we need to really change a little bit the mindset and also start discussing in particular how are some of these things connected and what's the difference. So there is actually a lot of benefit in trying not to be too technical, so that at least we start from a specific basis of, how do we communicate with each other. So I think, I will make a few remarks in the context of, in beneficiaries and impact. I think one of the first things that I like to highlight that the core interest or the core objective of the facility that we have set up with the support of the Netherlands is really to align to IFC's 3.0 strategy and our core objective of helping create new markets. And I think this is, in particular important when you are looking at, basically refugee populations, when you are looking at their host communities, how do you really help them to create new markets and new markets that are sustainable with sustainable solutions that are demonstrating and then bringing more private capital into, the solution. So I think this is great. Yes, there is a continuum from grant supported, interventions to help develop, products. And, I really like, Anem, that you help me complement that. Sometimes, when we think about blended finance, we are looking at the financial instruments, but it's important not to forget, and that's one of the core principles that we use, that the reinforcement of markets comes with the advisory services, with the government interventions that we, and a regulatory work that will need to, to take place. So all of these things are very, very important to bring it all together. In our early stage analysis, with people, with our teams in the ground, we think that, potentially the early transactions that we'll end up seeing is with financial intermediaries. I think that's where we see that, at least for, an institution like IFC, these small amounts that may be needed within the context of private sector today, a financial intermediary can help us do it better. And it can be on the debt side, or it can be, through a fund manager on the equity side. But that's something that we are seeing, that what that will allow us is to help increase the financing to, the underserved segments of refugees and host communities. So I think that's an important thing. We're expecting also to see, projects that, as Betsy mentioned early, are really development, oriented projects, expected accesses of finance, how do we support entrepreneurs, how do we support a small and very small SMEs through, financial intermediaries. It is great to hear the emphasis, Betsy, that you have been given to climate change. And I think a number of us mentioned how important, those communities we tend to, to see they are vulnerable. They tend to be, a lot of them, as you have heard before, in urban areas. So they become projects of, that we are seeking development impact, on. Also, what is important is that, we need to continue focusing on job creation, on service provision, on how to support entrepreneurship. So bringing the mindset of a development institution is very important, and that's why it's great to hear as well that private sector is looking at the impact principles to ensure that we are also, from an impact perspective, talking a similar language and seeing that these projects at the end of the day are going to have impact that we can identify, we can measure, we can report on, and all of things are, quite important. The dynamics of climate change, poverty, food insecurity, and conflict are interconnected, and I think that's where we need to be, seeing this unblended finance as a tool that will allow us to, try and use these financial instruments to help on some of these, very difficult challenges. For us, as you mentioned, end beneficiaries have to be, both the forcibly displaced populations as well as their host communities. If we are able to basically support across the continuum, we will probably be able to help create more permanent solutions that are much more commercially sustainable. As I think, to mention, just to highlight one more, that, I am very much in line with what we have heard from others, that at the end of the day, you need to help with demonstration projects that are focusing on development impact. And these are not going to be just, projects that we will see it, new projects created around just this topic, but, development projects that are supporting the impact that we want to create, with refugees and their host community. So from our perspective, this is something that, as I mentioned, infrastructure, projects that are climate smart, increasing access to finance, all of those things is something that we expect that we will be, working on with our new facility and the blended finance tools we have. Thank you.
Great, thank you so much, Kruskaya, for all these, these insights. And maybe on a funny note, on the AIDA anecdotes. So when we were preparing, and I saw my notes around AIDA, I'm very familiar with AIDA, but because I've been working in development finance, but I did not know like the full name. So I received the note with International Development Association, and I was like, oh, what is it? And I had to check, and oh, it's AIDA, So it's also around the acronyms. So you need to learn what it is and the acronyms, so it can become a bit complex sometimes. So on a more serious note, we have received a question from Catherine Trimpop, sorry, in the chat. So maybe I will just go through it and see who wants to answer. So just to summarize, the question is that, around innovative financing solutions, there is, especially in the geographies where we work, there is a need for regulatory changes. And so there is a need for institutions, public institutions to step in as well. And there could be sometimes a gap, between the need for innovation on one side and on the other side, the fact that institutions might not be very keen sometimes for innovation or financial innovations. So I don't know who wants to answer this.
Can I just say something very quickly on that?
Betsy,
and believe me, I am not a financial expert on this, but I just want to point to the situation in Jordan a couple of years ago, where in order to encourage companies to hire refugees, they changed with the EU. The EU decided to change the rules of origin. So the percentage of a product that needed to be produced in Jordan to have access to the market in the European Union was changed in order to then provide an incentive for refugees to be hired. So there was political will because of the Syria crisis. So I completely agree with what the colleague has put in the chat. And I think it takes a coordinated effort by different actors to have that discussion with government so that it makes sense to the government as well. It won't happen in all cases. I can think of a number of countries right now where politically things are very blocked. But I think if you bring different people to the table to have those discussions, you can change things. Thanks.
Maybe just a compliment,
Sure.
very briefly, just to highlight that, in the context of the AIDA private sector window that, we basically work and manage, that's an essential aspect of it, is the collaboration across all of the World Bank Group organizations and, basically bring that mindset that we are not going to get to commercial sustainability on the private sector if you have fundamental issues of regulatory nature. So working together, with the government through the World Bank for us becomes an essential part of how we think through that idea of using blended finance temporarily to get to a commercial solution.
Yeah, and I'll just add my own perspective here. I think Catherine is exactly right in terms of kind of the political overlay here, and in terms of kind of the risks that are introduced, and also the direction of the kind of the supervisory bodies and kind of the regulators in each of the countries, just around kind of AML and kind of CFT issues. And I guess where I would go is the private sector, if left to its own devices, will solve around it, right? So where there are right to work, right of freedom of movement, and right to open and access financial services, those right to property and ownership, those are the kinds of areas and opportunities where the private sector will gravitate to, at least initially, right? Where some of those regulatory challenges and some of the kind of the oversight and supervisory challenges have been addressed. I think Betsy was exactly right, where I think private sector coming together with our development finance institutions and other parties kind of within the country to be able to influence direction with respect to the countries that are not there yet, I think is going to be critical, and that's part of what I think Chris Kaya also spoke to earlier is where some of this technical and collaboration kind of needs to really happen in order to unlock additional markets beyond the ones that are already favorably inclined to be able to address this solution.
And I'd like to add a comment as well. And there was something I was going to mention from the first two panels. We're talking about how to put the capital together, and we're talking about who the beneficiaries are, but I think it's sort of an obvious point that's going unsaid, but we also need to talk about who we want to work through, who are the implementers. And like some other sectors I've worked in, I tend to use the word network, think of network organizations, whether that's an NGO, not-for-profit, a DWM, a Kiva. And that, I think it ties into this point as well, because in one sense, okay, maybe one of the regional, I'm going to use Africa. We could use one of the regional African bank networks. But chances that we get them to dive head on into this arena to start with right now, probably not. Really, the way it's probably going to work is, again, one of these state or credit union cooperative, we work with them, right? We develop projects, we develop portfolios, and ultimately those move up to where then one of the regional banks and its subsidiary operations in countries then may be willing to work with them. And it gets into this issue of governmental regulation, banking regulation. The thing about many of these type of organizations that this is their forte, right? This is this gray space they're used to working in. It's not only the finance innovation, it's the regulatory innovation and those other pieces that need to be pulled into it. So I just think the refugees and displaced persons is yet another place where we really need to think about these, cutting edge organizations. This is the arena they work in every day. These, to me, are the most likely candidates for us to develop these type of innovative structures with.
Great, thank you, Bruce, and thanks everyone for all your comments. It seems that I'm not needed anymore for the moderation of the event. It's great to see such a great discussion between all of you. I also thank you to Sneha Tahil from Convergence, who has put a comment for everyone with the link of the Convergence design funding. It's great to have Convergence also as part of the attendees. I also understand that FMO would like to share some thoughts around Nazir Fund, if I'm right. So maybe we'll keep, just for my team, we will keep them maybe in 5 minutes at the end. And now maybe I would like to give the floor to Alim, maybe to share a bit more around some examples. So I know we discussed around Crystal, Portco, or Kims, or anything else from the DWM that you would like to share with us today.
Yeah, and Cedric, thanks for that. But I think I'll keep my comments quite limited and see some of my time to Suma to actually go through kind of some of the specific examples. But I mean, just to suffice to say that in practice, we found that whether our financial institutions had the intention to or not, our portfolio of financial institutions and investees has already served and been serving forcibly displaced communities, right? And I think based on their location, their growth trajectory, the specific country context, they've been serving rural to urban migrants. They're kind of the vulnerable kind of host communities, and two in particular I think are notable, and I think Suma's going to touch on one of them. But one of them was a portfolio company that was founded somewhere, I guess, in the early 1990s in Cambodia, primarily serving kind of both rural migrants and returnees of those that were displaced during the Civil War, and another one actually was established by IDPs in Georgia that were displaced as a result of the Abkhaz conflict, also in the 1990s. Kind of both were set up to serve populations with loans and financial services, both transitioned to non-bank finance institutions, and both became fairly significant top 3, and in the case of Georgia, the largest microfinance institution in the country using the same principles that they adopted to actually undertake this activity in the first place. So, Suma, maybe I'll hand over to you just to be able to speak to the Crystal example and some of those mechanisms that we were able to see put in place.
Thank you, Aline, and thank you everyone for the great comments. I think a lot of the points resonated, especially as we try and bring it home with specific examples and the impact it's had on end beneficiaries. So I think one of the main points, I think, that you brought up also during your initial response and defining innovative finance in terms of the market opportunity. So we did send out this survey that Aline described earlier. And one of the other findings that came out of it is, what's sent to financial institutions in countries that have high volumes of displacement. But one of the findings that came up is an overwhelming majority, over 95% of them, came back to us and said, look, we do know that we serve forcibly displaced people somehow in our portfolio. We can't tell you what proportion it is because it's not a systematic approach from our end. And so what we realized is that the interest exists, the ability exists. What's needed is stakeholder alignment to get it across that point where it's an ad hoc approach to more systematic at the institutional level. And then that's what we've seen even in the case of Crystal, the microfinance organization set up in Georgia post the war with Abkhazia. And what we are now seeing is that in terms of their portfolio serving internally displaced persons, they are at about 3 to 5%. There's no clear way of identifying it, but that's one of the things that's a work in progress. The other important distinction, I think, is on the perception of risk. So what is the underlying risk versus the perception? And Betsy, Kriskaya, both of you brought this point up, but especially in terms of the data, if we look at the portfolio of Crystal's portfolio serving IDPs, we're talking about, in microfinance terms, the Part 30 asset quality number of less than 2%, which is actually on par or better than peer numbers for that same metric. And so we have the data now to show that the perception of risk differs from what the underlying risk is, which opens up the toolbox you can use in trying to scale it. And then we start to go into what are the procedural aspects you can do. Of course, the advantage with an equity or a board influence position is that you have a longer term partnership with the company. You can try and drive it from the leadership level down to the management level. And then how do you set in place procedural incentives, like the performance-based incentives, Kriskaya, you spoke about, at both the institutional level and then as a fund manager, at the fund manager level to link incentives. And then comes this other important aspect of verifying that impact. So how do you, if you've set these targets, how do you measure against it, manage for it, verify for it? And so actually, before we hand it over to the audience to address some of the other examples, I think I'd just like to invite Justin Sykes from Innovest Advisory, if he's on the line, to give us a quick 30-second overview, if you can, Justin, of how Innovest has been doing this, the impact management and measurement process in displacement settings.
Thanks, Suma, and great to join the conversation today. It's been really rich dialogue. Great to see. So yes, we're involved with a displacement inclusive microfinance intervention in Somalia, working with a microfinance institution called Kim's Microfinance. Really interestingly, around 20%, 25% of their client base are displaced population. So both refugee returnees from Kenya, internally displaced populations as well. And with the support of UNHCR, with German GIZ and other partners, a revolving credit facility was created to support these various displaced populations have access to micro and small business finance, and also savings products as well. Interestingly, it's not only micro finance for returning refugees around sort of vocational link qualifications, so your plumbers and your carpenters, but it was also working with SMEs actually in the host communities, including agricultural and fisheries cooperatives, who were then provided with SME loans to expand their ability to hire refugees. So it's not just the micro employment, but it's also small business development that then refugees can be employees. We've been working with that project now to provide some really granular impact measurement and management solutions. So have helped develop an overall theory of change for the project, an impact measurement framework, displacement inclusive metrics, and are now working with the team of the microfinance institution and the local telco to actually deploy a survey instrument via SMS that would survey over 1,000 clients across 8 branches throughout all parts of the country, to ask very granular questions around what the impact of lending has been on their lives, both in terms of business revenue, how that revenue has then been used to support family circumstances, pay for things like education and healthcare, and also support their integration into host communities. And I think this type of work we're doing is very much part of a broader set of work that we're working with Suma and Aleem at the team of DWM in the future, will be to take this sort of granular impact measurement and management at the outcome level, going with portfolio companies to measure outcome level, beneficiary level impact of lending, and roll that up across a portfolio to provide investors a real sense of what is the grassroots impact of displacement inclusive financing via a portfolio approach.
Great, thank you so much, Justin, for these inputs. I think we also want to hear, maybe within 1 minute, and I apologize, we run out of time. Jiske from FMO, if we can, and I apologize also if I don't pronounce your name correctly in advance. Thanks, if you could hear from you.
Yes, thanks for allowing us to speak. My name is Jitske, and on behalf of FMO, I would like to share a little bit about our Nazir Program. The Nazir Program is a European Commission-funded program which tried to grow a guarantee portfolio of 500 million for underserved groups. So the idea is to promote inclusive growth and sustainable development by decreasing risk of underserved groups, including also irregular migrants. So what we're doing, and I think which is in line with what has been said here, is really to provide kind of complementary services within that program, which on one hand is a risk sharing facility which offers a 95% guarantee on a specific portfolio which includes those underserved groups. Together with this risk sharing facility, we can also offer funding, so that we then go together. And in addition, we offer technical assistance for the end beneficiaries, but also for the bank to develop capacity to serve better this group. And I think one thing that is interesting to highlight, which has been discussed, is the data. So what we have is also a Hyperport, is a platform. It's like an organization that we work with, through whom we gather the data from our beneficiaries. So the financial institutions which we work with, they gather the data from the portfolio that they on lend to, like the beneficiaries they lend to. So we hope long term that this data is actually going to help us to understand like the profile of migrants, like what is really the underlying risk, how do they perform, and with that again, try to catalyze and more funds and to really support and grow that opportunity. So I think that's one innovative element that we added to this program.
Great. Thank you so much, Jiske, for this intervention. And I apologize, it has to be short because we are running out of time. It's great to hear from you. And maybe we'll close the roundtable now. I think we could speak for days. It's a very interesting topic, and I think next time we'll have to create a one-day roundtable so that everyone can share more thoughts around this. I just wanted to summarize. We started by defining innovative financing solutions, trying to hear from everyone the different types of definition, either involving the private sector, development finance, and humanitarian agencies. After we did dive a bit more into the tools, it was great to hear from everyone's around the types of tools that you see and the way we can attract private sector participation in these thematics. And thanks again for sharing these stories around the different initiatives, either from the audience or from the speakers here today. So I think we will end this roundtable. Thanks again very much for all the speakers who have contributed, and also for the efforts, during the preparations of this roundtable. It's a great pleasure to have been able to moderate this discussion with you. And let's try to keep up the momentum and to continue this collaboration between all of us to build up new solutions for the people who need it the most, the end beneficiaries. Thank you very much, everyone.
Thanks.
Thank you.
Thank you. A pleasure. Bye-bye.
Bye now. Thank you.